Hey traders, I'm sure you've heard of the Heiken Ashi indicator. It is one of the most powerful trading tools used by traders to get a clear view of the overall market direction. However, did you know that there's actually a better version of this indicator that has proven to be almost 2 times more profitable than the older version? And so without further ado, let's dive right in. I'm going to show you what the indicator is and how you can use it. So first, let's look at the classic Heiken Ashi. As you can see, the way it works is that it helps smooth out the price. By replacing your traditional candlestick chart to a Heiken Ashi chart, making it easier for traders to analyze the overall trend, like in this example. Here in this traditional candlestick chart, notice that there's a lot of market noise in this upwards price movement, which could lead to fall signals. Now if you change this to a Heiken Ashi chart, you can see that it actually eliminates those market noise by displaying same colored candles when the market is trending, therefore helping traders analyze the trend more easily. However, as with any technical indicators, the Heiken Ashi has a couple of drawbacks, and one of the main drawbacks is that it doesn't provide the same information as a traditional candlestick chart. The reason is because the indicator only displays the smooth-out version of the price, not the real price, and this may restrict a trader's ability to perform certain types of analysis, such as identifying chart patterns or finding key support and resistance levels, because we would need to see the real price in order to do that. So to solve this underlying issue, a new indicator is created, and it's called Smooth Heiken Ashi. Unlike the classic Heiken Ashi, which fully transforms the candles on a price chart, the Smooth Heiken Ashi instead works as an overlay in a real chart, meaning traders are able to use the indicator's capabilities while still maintaining a clear view of the actual price movement. Furthermore, the Smooth Heiken Ashi is much better at filtering out noise when the market is volatile. As you can see here, the Smooth Heiken Ashi isn't really affected by the short-term market volatility, as it still gave consistent signals, compared to the classic Heiken Ashi, which produces multiple fall signals as it reacts more sensitively to short-term volatility. Now, I'm going to show you how to apply the Smooth Heiken Ashi indicator onto your chart. So, you can use any charting platform, with the one that I'm using is tradingview.com. Next, go to the indicator section, type in Smooth Heiken Ashi, and there you can choose any one of these different options. Now once you've applied the indicator, the next step is choosing the settings. If you're trying out this indicator for the first time, you can just use the default settings at 10 and 10. However, if you want to optimize it for your trading needs, here are a couple of recommended values that you could use. First, if you're focusing on scalping or capturing short-term movement, you can use the 5 and 5 settings, as it's better at analyzing short-term price movements. Now if you're a swing trader who wants a longer-term view of the market, the 20 and 20 settings is a lot more suitable, as it lets you analyze the long-term price movements without being affected by the short-term volatility. But for the examples in this video, I will be using the 10 and 10 default settings. How to use the Smooth Heiken Ashi. So the way traders could analyze the market using the indicator is by looking at the Heiken Ashi candles. A green candle indicates that the price is on an uptrend, while a red candle indicates that the price is on a downtrend. And knowing this, we can also utilize these colored candles to identify signs of reversals. For example, if the indicator showed a color change from green to red, it indicates that the trend is switching from an uptrend to a possible downtrend, and vice versa. The size of the candles could also help traders identify the strength of an existing trend. If the candles are growing larger in size, it indicates that the trend is getting stronger, which means more momentum. Similarly, if the candles gradually become smaller, it indicates that the strength of the trend is getting weaker. Now these candles could also help traders anticipate trend reversals. For example, here we spotted a trend reversal from a downtrend to an uptrend, which is also displayed by the Heiken Ashi, switching from a red candle to a green candle. However, notice that before the indicator changed colors, the red candles were already decreasing in size before turning green, which shows us that the downtrend here was actually getting weaker before the reversal to the uptrend happened. Strategies that you can use with the Smooth Heiken Ashi. So as we know, the indicator displays red and green candles depending on the trend direction. However, you need to remember that this isn't a buy or sell signal, you cannot take a buy. position just because the indicator turned green, and you can't just take a sell position just because the indicator turned red. That isn't how you're supposed to use the indicator, because using it that way will actually result in a very late entry signal. Let's observe an example. In this chart we notice that the market is on a strong downtrend as indicated by these large red Heiken Ashi candles. Next, we can see that the Heiken Ashi candles gradually become smaller, before finally turning green, which indicates a trend reversal to an uptrend. However, notice that the color change happens after the price had already made a significant upwards movement, so if you would have entered a buy position here, that would be considered a late signal, because you already missed a huge portion of the price movement. Now I'm going to reveal a better way of using the smooth Heiken Ashi indicator. The first step is you want to find a strong existing trend. Like in this example here, you can see that the price is going down while the indicator is displaying large red candles indicating that the price is on a strong downtrend. Once you've identified the trend, the next step is to look for a trend change, and we can do that by waiting for the Heiken Ashi candles to show signs of a trend reversal. And as you can see here, the candles gradually become smaller and smaller before finally switching to a green color, so now we have our trend change. However, you don't want to take a buy position here yet, because like I said before, that would result in a late entry because the price had already moved upwards. Instead, what you do is wait for the price to make a pullback towards the indicator. So we're actually using the indicator as a dynamic support and resistance. Now the next step is waiting for a confirmation signal, because we want to make sure that the trend would continue upwards instead of reversing downwards, and so we're looking for an upwards price action at this area. And right here we actually spotted a red candle with a long wick towards the downside, indicating that at one point price went all the way down here, hitting this low, before reversing back up and closes at this level, which signals rejection from the downside. Next, after this rejection candle, we also have a green engulfing candle that formed, which signals upwards momentum, further confirming that the price may continue upwards. So, because we already have our confirmation signal, we can now take a buy position right here. Now for your stop loss, you can place it at the nearest swing low, which is at this bottom candle wick, and your profit target could be set at 2 to 3 times the stop loss. Notice that using the indicator this way actually results in a better entry signal. Now let's see this example. In this chart we can see that the price is on an uptrend as shown by the smooth Heiken Ashi forming green candles. And after that the Heiken Ashi made a color change from green to red, which indicates a trend change, so again we don't want to take positions immediately, because that would have been a late entry as price already went down significantly. Instead, we want to let the momentum settle down, and wait for the price to make a pullback towards the indicator. And as you can see, price indeed made a pullback. Next, we have to further analyze the price action to further confirm that the price will actually reverse from this level and not continue upwards. And right here, we spotted a bearish engulfing pattern, which is a candlestick pattern where we have a candle's body completely engulfing the previous candle, signaling downwards pressure. So because we already have a confirmation signal, we can now take a short position here. For stop loss, place it above the previous candle's quick, and set a profit target at 2 or 3 times the risk. And as you can see, this trade ended up being profitable. Now, aside from using it as an entry indicator, you can actually use the smooth Heiken Ashi as an exit indicator as well, specifically a trailing stop loss indicator. By using its ability to analyze the strength of an existing trend, it could be an effective tool if you want to keep your winners running and maximize your profits in a trade. So here's a strategy example. In this chart we can see that the market is moving sideways or within range. And below this area here we spotted multiple rejections, meaning we can draw a key support level down here, because price has a tendency to reverse after hitting that area. Next, at this level above here we notice a downwards trend line as the price is consistently rejecting this upper area. Now if we take a closer look at this price formation, it's actually a descending triangle pattern, and in this type of chart pattern, price tends to form a breakout after it breaks either one of these key levels, and right here, it actually broke the upper level, which means that breakout is likely going to happen to the upside, and to take advantage of this you can open a buy position here, Now usually, in a breakout setup like this, it's very common for the price to surge towards one direction, giving us the opportunity to earn massive profits. And so if your take profit target is set too low, you could potentially miss out on a huge profit opportunity. So to maximize your profits, instead of using a fixed profit target, you can use a trailing stop loss indicator instead, and that's where the Heiken Ashi comes into play. So, what you want to do is let your open positions run until the Heiken Ashi changes color. Once it changes, it signals that the trend has come to an end and you can now close your position and finally take profit. And as you can see, because we let the trade continue with the upwards momentum, we were able to capture most of this upwards movement. So those are a couple of ways that you can implement the smooth Heiken Ashi indicator onto your trading strategy. Now, if you want more simple, easy to understand trading videos like this, kindly show support by liking this video. And subscribe to the channel. It only takes 2 clicks, but it means so much to me, and you can check out my other videos as well. So thank you guys for watching, and I'll see you in the next video.